Afternoon. How are we all doing? Oh, German finance ministers just said something. Exciting. Afternoon, Mimo. Bonjour. Smash the like button. Good idea. On John, where are you? There you are. Hit thumb button. Afternoon, Steve, Evil, Crum, Peter, Monkey. It's time for Guinea. How are we all doing? Sarah, hello. Right. So this afternoon we're on for the what are we on for this afternoon? Unemployment claims. Completely lost the couldn't see that. Completely lost the news. So yeah, unemployment claims this afternoon. We had the Aussie dollar unemployment rate overnight, which was 3.8, ever so slightly down on forecast, but still up. So not good. Better than they were expecting it to be, but still bad. So we'll have a look at the Aussie in a minute and see the impact of that. But that's what we're on for this afternoon at 1:30. So unemployment claims, sort of important, but not as important as the unemployment rate, because not everybody that's unemployed can claim or does claim. So it's an indicator, but not the most important. So forecast is for that to go up. If it does go up, obviously it will have a potential negative impact on the US, but we will see. They're forecasting pretty much no change. So I get the feeling it might be a bit of a damp squid this afternoon, but we'll see what happens. Afternoon, AZ. Back from holidays. Excellent. Good man. Well, you haven't missed anything. Pretty much prices are probably in the same place as when you left. I don't know when you left, but market's not good anywhere. Afternoon, Daniel. Amy. Yeah, flat as a pancake. You can see how flat as a pancake it is if I show you the RSI dashboard. There aren't any. Dead. Absolutely dead. The US dollar yen kind of sums up the market at the moment. Or US dollar Swiss kind of sums up the market at the moment. Had one move and another move. That's it. So if you went on holiday there, welcome back. You haven't missed much. Dire. Absolutely dire at the moment. Afternoon, Roswitha. Looks like Bank of Japan did nothing at all. Yep. I'm about to kill the Bank of Japan. We'll have a look at that in a minute. Afternoon, New York. So overnight news, if we scroll back, going back to this morning, that's the unemployment claims for the Australians. As I said, 3.8, forecast 3.9, slight miss on forecast, but increase. So as you can see by the ADR dash, nothing's hit ADR today, so the market didn't really react to that much at all. We had a bit of Bank of Japan noise coming out. Nothing particularly interesting. One thing that was interesting that I saw in here was Noguchi saying something about changes in rates. Basically not sure what they're going to do with interest rates. Not sure if they're going to increase them again this year. And I'm like, really? It's April. You've just put them up for the first time in 16 years and you don't think you're going to do anything more this year? I hope so, because next week we're expecting a rise. But anyway, I can't remember where it was. Oh, yeah. Service prices not driven by wage hikes. No, that's not it. Anyway, there was something in there about that. But nothing about the intervention. We've got the normal comments on Forex movement. Candor discusses daily talks on FX, blah, 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 blah. So the same stuff. They're still watching very, very closely. But obviously, we haven't moved on the US dollar yen now for, well, we moved up there and then we've had basically day 3 sideways. So they've been talking and talking and talking, but doing nothing. So there's still no more news. We've got Nagel speaking at the moment. So that was it pretty much overnight. This was Noguchi talking again. But anyway, there was something said in there about not sure. Oh, yeah, here we go. I can't say if another rate hike will be this year. So you move it for the first time in over a decade, and then you go, I might not do any more. I think you will. I don't know quite. This is typical Bank of Japan, isn't it? No idea what they're talking about. And what they do say is just go over everyone's head. Japanese firms offered wage hikes of 5.2%. Again, this is something that could impact inflation. Wage hikes basically mean companies have to pay out more. As they pay out more, they charge more. Charging more drives up inflation. Inflation drives up interest rates. So again, what Nagel just said, not sure if we're going to hike the rates. If you're doing that, you're going to have to. So yeah, it's all a load of rubbish. Anyway, so there's no other news this morning. There's a lot of stuff come out, but not a lot. Nagel's speaking at the moment, as I just said. We got 7 minutes to the news. We can't rule out small rebounds in inflation in Germany. Increasingly confident about the disinflation process. I am not uncomfortable with market pricing in rate cuts. That's a roundabout way of saying, you're right, we're going to do it. So that sounds like something from Billions, doesn't it? When he says, how confident, I am not unconfident. Whatever it is. I can't remember the exact line he says, but anyway. I am not unsure. That's it. How sure are you about this trade? I am not unsure, which means I'm sure. So he is not uncomfortable with the market pricing in a drop, which means he's comfortable with it, which means euro should. So we'll see if anything's reacting to that. Yeah, negative euro. I was so close to getting, I had a break-even opportunity on the euro-US dollar trade this morning, which I didn't take because I've been sitting in the thing for over a week and I'm not interested in break-evens at the moment. I just want to make some money. Anyway, US dollar yen was at 80 RSI on the daily yesterday. Yeah, big. Big extension. Again, you know, this we got there last time. We pulled back. Again, threats came in at 145. That's 145. That's where they threatened last time. The market went, oh, sorry about that, because they saw what happened last time they threatened them. Broker. So yeah, last time, obviously, we got threatened. We did that, and that. So that's where they started threats again at 145. Market did that, and then it went, nah, actually, we're going to push you a bit further. Then we got up to there, and they went, really? We're going to do it? And they went, all right, we'll go. And then we came back up. We sat there after they threatened us, and that's what happened, obviously, last week. So we are now extended again back up to this level where we normally get a catastrophic drop from. Either an intervention there, you can't see it, it's behind my head, but there's an RSI extension there, and there's an RSI extension there above 80. So that intervention, that RSI extension there, we got an intervention. On that RSI extension, we got an intervention. On that RSI extension, we got threats and the market pulled back. On this RSI extension, we've had threats and nothing's happened yet. So we'll wait and see. But yeah, very extended, very extended. But we'll wait and see. Afternoon, Gav. We have had a reversal on the US dollar yen. And obviously the retest is happening now out of that propulsion gap. So if this is going to be a market structure break, this is the start of the M pattern reversal. And then obviously we will just undo that, basically. So hence me not having any targets on it, because I just want to hold this. And if they press the button, it won't make any difference, is it? Right, so we got 4 minutes to the news. So unemployment in the US at the moment, the unemployment rate is at 3.8. It's very high. Well, I say very high. It's higher than they would like it to be. It has been coming down ever so slightly. So what happens with unemployment? If unemployment rises, again, as I said, if unemployment rises, we get usually a slight increase in that, and it stops them putting the interest rate up. So it's more down. but that's an unemployment rate, whereas this is unemployment claims. But it does give you an indication as to what the unemployment rate might be. If this goes up dramatically, you would expect the next unemployment rate to rise, which would be negative for the US. So we'll see what happens. We've got 2.5 minutes. So ADRs today, there are none. We've had nothing moving today. Looking at the Aussies, we obviously had the Aussie dollar news. As you can see, Aussie dollar CAD completely sideways, no movement whatsoever on that. Aussie dollar Swiss, completely sideways. Aussie dollar yen, slightly bullish. Aussie New Zealand, big push up, big push down. And Aussie US, ever so slightly bullish. But I mean, you opened there and you're there. So when I say ever so slightly, pretty much nothing. So no movement of the news this morning, which was the Aussie rates, and there's no ADRs absolutely anywhere at all. The weeklies we've already been through, went through those yesterday. A lot of these have already played out. Swiss yen's looking good. We're just taking out the highs. You're about to get a reverse alert in 30 minutes on the hourly on the Swiss yen. So there's a nice potential double top M pattern reversal, multi-day M pattern. And that is extended on its weekly as well. Got Knots talking as well now. Right, so we'll watch the news. Let's watch Euro US, because I'm in it. We'll see where it goes. We've got 1 minute to go. If anybody's got any pairs they want to look at specifically, let me know, but there's nothing to analyze today. There's no ADRs. There's no RSIs. So I've been working on the new EA today, the sentiment EA. Found some bugs in it. So I'm just working on that. My oil trade is not going well either. It's not my month this month. So oil has dropped nicely into an accumulation though. So I'm hoping we get a bounce out of this. This is the speculative trade I'm playing on oil for the escalation in the Middle East, which again isn't happening. Everybody's just talking about stuff. Everyone's saying stuff. No one's doing anything. Drives you nuts at the minute. It's a sentiment EA. So it trades sentiment. I'll have a look at it in a minute. I'll explain what it does. Okay, news is out. That kind of sums it up, doesn't it? Oh, there we go. A little bit of movement. So it's bullish US. So numbers will be short. So unemployment claims will probably be slightly down on forecast, which is bullish. 212 on a 215. So it's pretty much as expected. They were not expecting a fluctuation much at all, and they didn't get it. So that's as expected. Philly Fed manufacturing is huge hit. That's massive, isn't it? 3.2. They're forecasting a 1.5. They got a 15.5. That's quite a big deviation. That. It's a very big deviation. I've had numbers that far out before, but so a big green number on Philly Fed and no change really on unemployment. So I wouldn't expect it to do a huge amount. It's slightly bullish, as you can see, for the US at the minute. Brilliant. I was close to a break even on my Euro US. So we'll see if this holds, this propulsion move. So we've just basically broken out of this double top yesterday, and we broke that high, cleared that propulsion gap. We were heading up into this propulsion here. So that is the break of that level there. So we hit that, and obviously we've bounced straight out. So sellers here added straight back in today. So we're looking to see if these buyers here have got enough welly left to drive this back up. So with the battle lines basically are here and here at the moment. So we're either going to break back down and these sellers are going to take back control, or the buyers that have broken out of this weekly area are going to rally and add into that move there. So we'll see what happens this afternoon. What I don't want to do is get stuck in another range for weeks. All I seem to be doing at the moment is just being in ranges. Driving me. Army. Afternoon, Mark. Afternoon, Church. Can't read that one, sorry. So propulsion gap's holding at the moment. So this is basically just that break, those highs. So it took a lot of buy power to get through that level. So see if they hold. Just taking out the low of the day as well. So anyone that's longed it today will be adding to that buy. Afternoon, Michael. No, Michiel. Probably pronounced that completely wrong. Afternoon, Neo. Yeah, it doesn't seem like there's a lot of reaction to that at all. So it's an initial slight drop. Indeed, yes. Names are not my forte. So we're just taking this low at the minute. So anyone that's long, not really from there, but anyone that's long here, it's been bought twice today. So they'll be defending this position here, trying to get back in. See if it holds. Michael will do. That's good, because I can pronounce that one. Not doing a lot, is it? So only positions I've got on at the moment are Aussie New Zealand, which I've been in since February, and I'm still stuck in this hideous range, which we have actually broken out of now. So we're just pulling into this probably a monthly low. It's very difficult to tell what a monthly and a weekly level. That's a weekly, actually. That's 3 week ago's low. So this, you can see from this chart here how contracted this thing is. You've got your 1 week, your 2 week, and your 3 week low, all taking up that much space at the moment, which is basically 18 pips. So that's half an ADR. So the low of the last 3 weeks is half an ADR. That's the high of 2 weeks ago. That's the high of last week. Yeah. And the total range this thing has moved in 3 weeks is 2 ADR. So we are absolutely stuck fast at the moment up here. That structure break that we had is holding. So we have put a lower high in. So the propulsion move that broke those lows is holding. So they added. We tested it, added again. So we've now broken down through that low, through the market reversal. That's holding at the moment. So once we break this low and hold this low, we should be good to come back and retest the initial move from February, which is the interest rate change, or rather no interest rate change on the New Zealand dollar. So we've just had a go at that low today, which is initially held. So there's a good selling pressure today. If we can break this low, we should be off and get a good few days worth of drop on this. We've got no news coming up for the New Zealand dollar that's going to impact us really until Wednesday next week, which is the Aussie CPI. So, and if that CPI number comes out lower than forecast, that's really going to help that thing collapse. So, yeah, good. I mean, if we can get through to Wednesday and I can exit, fantastic. If we get through to Wednesday, I will scale out of some, do some drawdown control, and then hope that that comes out as a negative number and drop that. So I'm in that Aussie New Zealand. Euro pound I've been stuck in for the last week. Initial entry was on the mean reversion play there. That didn't work out. So second entry taken after that second drop that we had 2 days later. We're 4 days in now. We have had a reverse alert. Now we've had a reverse alert to the downside, but so I'm looking for them to at least come and retest this propulsion move here. If not, come back up and retest the news event. So I'm long on that at the minute. We know I'm in US dollar yen, and I've been in it for what seems like forever. Just not doing the intervention, and US dollar Swiss, which I'm in as well. So been stuck in this one since February as well. Everything else I'm out of, but just unbelievable squeeze. Well, not even a squeeze. It's just no movement, is it? It's just ranges and it's news. It's 3 news events. 1 news event, range. 1 news event, range. 1 news event. So same as the Aussie New Zealand, looking for them to come and retest this. Absolutely no reason why this should have done this. The Swiss franc, obviously weakening, was from here. But yeah, it's just no reason for this move at the moment either. So waiting for it all to be undone. But I can't get into anything else. Everything else I've got into, I've got out of. So it's just, I'm just finding it very difficult, like Euro CAD there. Look. Everything else I've got into on the RSIs is just been straight in, straight out, straight in, straight out, literally in and out within 2 or 3 days, 1 or 2 positions, everything. But there's just no setups at the moment. The market is so unbelievably contracted. We're getting so few signals to get into anything. It's just very hard work finding opportunities, as you can see from the dash today. I mean, there's nothing to look at. So I've been doing some, hence me looking at the sentiment EA again. I'm just revisiting old strategies that I started working on. And I'm also working on a breakout strategy. It's that bad at the moment. I'm even considering going back into stocks. I know. Using stop losses as well. So I've been working on the sentiment EA, which basically is trading 2 accounts, and all it's doing is very, very simply, if sentiment is weighted heavily in one direction, and I've chosen 70 as my minimum, I've got 1 account which is basically going with the sentiment, and I've got 1 account that is going against the sentiment. And if the trade is in profit at end of day, it closes it and says thank you very much and sticks it in the bank. If it isn't, it waits until the next day, and then if sentiment is still the same, it enters a second position, up to a maximum of 5 positions. So it's very, 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 very simple strategy. In the morning, if they're all short, we go long or short, whichever way you want to go with sentiment. Normally you would go against it. I'm just testing basically what the impact of sentiment is from a going with and going against perspective. So it's a very simple EA. It's not doing anything complex at all. It literally is looking for profit. So if it got up to here today, so my average would be about there. If it got to there by end of day today, it would just shut it and take whatever it's got. It's just literally designed to get in. If the P&L is positive at the end of the day, take it. Thank you very much. If not, and the sentiment is still the same, try again. Because what we know is, as the market sentiment indicates one direction, the market tends to move in the other. So basically, if they go short for 3 days on this and the market drops, very, very likely to go long against them, isn't it? So, so yeah, so I've been working on that. That's running now. I had some bugs in that which I've had to fix today. So I'll update you on that as it goes. It's more of a social experiment for me, really, seeing what the sentiment options are for going with or against. I'm pretty sure, and in fact, I'm 99% sure you've got to go against it. But what I'm trying to figure out is a strategy. And all the strategies I tried before were a bit too overcomplicated. So I've gone with very simple. At 9 a.m. or rather 7 a.m. UK time, before the market opens in London, we just get in against sentiment. And if sentiment is wrong, as it usually is, we get out at the end of the day. If it's right, we get in again and wait for it to be wrong. Very, very simple strategy. And it will obviously take a loss if the market pushes against 3 ADR. So if we can manage to move 3 ADR against us, with sentiment being wrong. Well done, sentiment. But it doesn't happen very often. So we'll see. But it doesn't back huge amounts of money either. So yeah, I'm basically using this time where the market's quiet at the moment just to work on strategy development. So I've got another strategy that I'm looking at as well, which is a trend breakout strategy that I used to trade in stocks. So it's a swing strategy working on the 4-hour and daily charts. So I'm looking for something to basically get into as an alternative at the moment, because if this market condition is going to stay like this for the next 6 months, got to find something else to plug the gap at the moment, because everything is totally contracted. Stock market's doing all right, and stocks individually are doing okay, but the FX market is absolutely stagnant, totally sideways, and it will be until we get interest rates changing. So that is at least June, if not more. There we go. Vilroy's just confirmed that. Thank you, Vilroy. I'm open to rate cuts at each meeting after June. All right, fine. So he's looking for July. Lagarde has sort of semi-confirmed June for the first rate cut, but that's not the US. So we're waiting to see what the US does. There you go. Vilroy, barring major surprise, we should cut rates in the next meeting. That's May. Just the next meeting not in May? Oh, no, they're not meeting next month. Oh, okay. Yeah, June then. Yeah, so June the 6th is our next ECB rate. So June the 6th is next rate cut, is in theory, assuming, and obviously this on the 29th, which is week after next, that will be the key indicator. What happens with the German CPI? So if the German CPI is bounces heavily, that could push the ECB back. So that's the one we want to be in. We want to keep an eye on. And then we've got another one coming on the 29th of May, which again, if it bounces back on the first one and that also bounces back, that will bounce back in all likelihood. But we will see. We'll see what happens. So if anybody's got anything they want to look at, let me know. Otherwise, I haven't really got a lot to say today because there's nothing really to look at. As you can see, we haven't had any movement today. We didn't have any movement much yesterday. We had some movement on some euros, but not a lot. Everything's. We had euro pound went nuts yesterday. We got 200 ADR on that, but that was it. It's just very stuck, as you can see, very stuck. So, kind of what I said on Monday is pretty much still true today. We're flat as a pancake. If you stuck moving averages on this, they'd all be flat. RSI is flat. Market is flat. Price action's flat. Everything's flat. Bored. Everybody's waiting for these guys to press the bloody button, but they're not doing it. Just watching Vilroy fly past. US dollar CAD, we can look at that. So obviously the US dollar had a rally off the back of the inflation numbers. So we're ticking up unexpectedly out of this what seems like forever range, what we were in again. So we're now potentially moving into trend territory. So it's undecided as to when the Fed is going to be closing down on those rates and starting to drop them. For the moment, as long as that CPI number is ticking up, which it is, this isn't going down. So at the moment, it's not really bullish. So this price action that I've been showing you on things like the US dollar Swiss, where we're getting a news event and then nothing, and then a news event and then nothing, and then a news event and then nothing. That's basically what we're experiencing in the markets at the moment. This year is very push on news, sit tight until you know what the next news is, because they're not giving any forward guidance. There's no way of forecasting anything at the moment. So it's basically a case of drive, stop, drive, stop. So you're either going to get one or two things happening. You're either going to get a rally forming in the US dollar CAD, and it's going to jump into a range, into a trend, or we're going to experience another range. So you've had this nice little pullback into the lows. You've put in a new high. We've had a reversal alert short through that propulsion move. So you have now got this area here, which will act potentially as range low. And if you're taking a trend trade, that is where you'd be looking for ads. And then it's either going to break out of those highs, or we're going to hit those highs and we're going to go range bound until the next news event. So at the minute, a little bit more downside, and then you'd be looking to get into a range which is just under an ADR. Basically, that range would be 112. So about an ADR. 83 is ADR at the moment. But it's only 83 at the moment because we've had a good couple of ADR moves in there. So when the market goes into contraction again, that will shrink. So, yeah, all you can do on that one. Yeah, this is what I would expect us to start to fall back into. So it's falling back into an uneven range up here. All we're doing is we're just moving into new price discovery. So this is price discovery. That will either fail, and we will come back and retest the high of that range as well. That's the other option that you could see. We could just come back and retest this range high and bounce into a range here. Either way, at the moment, I would, if you want to be safe, look for long only opportunities. So take reversal alerts long on the hourly, 15-minute, whatever you want to trade, whatever time frame you're trading. Take 1 hour longs, take support bounces, weekly highs and lows, ADR extensions to the downside, because you've got more chance at the moment of that pushing up than pushing down, because the CPI numbers not just bigger than expected, quite vastly bigger than expected. Yeah. This soft landing that they've been talking about with inflation coming down nice and smooth, it's not happening. The recession they said they're going to miss. It's not guaranteed at all. So there is even talk, not many, but there is talk of putting interest rates up early next year. If they cannot get a rate cut this year, which they are 90% sure is going to be on the cards, there is talk of putting rates up next year, because if that inflation figure that's come down ticks like this and starts to do that, they've got to hammer it. The only way you hammer it is putting your interest rates up, which will be massively bullish US. So at the moment, I'm neutral, but I would be bearing on rather going long than short. Hence my euro US dollar trade at the moment annoying me, because I got in off the back of that thinking that's a bit of an overreaction. And then the market has piled back in, but I get the feeling you get stuck down here somewhere. We'll see. 18 likes, smash the like button. Aussie dollar CAD. So Aussie CAD at the moment not going anywhere. It's the same story everywhere. We've got a fair bit of intraday movement on the Aussie CAD, but overall you're not really going anywhere. You can see the moving averages are just sideways. Yeah, there's no trend in play. We're just sideways. We're ever so slightly in an up channel at the moment. Canadian's been weak off the back of oil. Aussie has been unexpectedly strong, especially against New Zealand dollar, as we know. But yeah, I've had a couple of trades on this. I had a short there off of that RSI extension, and I had a long there off of that. So it's had a couple of opportunities in the last month, which have both worked. That's what I mean. I've either been stuck in a range for weeks, or I've been in and out within a day or two. That's how the trades are going at the moment. It's either that, because we're doing this all the time, or we're doing this. Those are the only two things happening in the market at the minute, which is great for these, but it's not great for anything that you're stuck in long term, obviously, because it costs a fortune to hold at the moment. But yeah, we're just kind of flatlining here at the moment at support. So this previous propulsion move is acting as support at the moment. So either we're going to see a low, high, higher low, higher high, and we're going to push up, or this US dollar is going to continue to rally, which will help the Canadian dollar, and we'll get a push back down into this support. But either way, at the moment, flip a coin. Might as well. We'll go one way or the other. I don't know. Neither does it. That's why it's going sideways. So either or. But that would be the best trade, I think, at the moment, to take that weekly low, because if you look out further and look to the left, you've got a fairly decent buy area here. So you've got this area here, which we basically pushed up into, rejected, pushed up into, rejected, stuck. And then we broke through it and we retested that multiple times. So we know that this is a very strong area, this monthly low. So if we can push down into ADR, push down into the weekly low from 2 weeks, 3 weeks ago, or that monthly low, which is basically all that area, that would be a good buy. You may not get an RSI extension on it, but you will, it would need to move very, very quick down into that area. That's all there is on that. Obviously, the propulsion targets to the upside. So we know that propulsion move, which was the news, they added. Yeah, then the propulsion moved down, they added. So this is a lovely target to the upside to aim for. So 150 ADR from where we are now. So you could expect, with this sort of chart, it's ever so slightly bullish, ever so slightly. Market structure is long. Potentially, this is exactly where you want to be buying it from. And assuming that we are either going to test that, come down, or we're going to put a new high in which case this is your higher low. But you can flip a coin. So you could go long here, up into there. If it doesn't work out, add a second position down there, average, and out. At the moment, it's not doing anything. It's just sideways. Euro yen. Same as all the other yens. Oh, that's a nice move. A little bit of yen strength coming in again. A bit of euro weakness by the looks of things. Yes, a little bit of euro weakness and a little bit of yen strength, making this a little bit stronger. You're just about to get a reversal alert on this. So you're just about to fill that. 4 minutes. You're going to get a reversal alert on the hourly short. So sellers taking control. Again, out of that propulsion move. So this was the kind of all-time high, if you like, which we pushed down from. Push back up into it. Sellers added. New propulsion move. Added. Yeah, retested. Added more. Retested. Added more. Retested. Added more. Retested. Added more. Yeah. Buyers are finding it very hard to get through this whole area here where these massive sell orders came in. So good sell area. And obviously we know the Japanese are on the back foot at the moment. Any second now, they could press that button and this thing could be 800 ADR. Well, this one won't be. This will be about 300, 400 ADR. But either way, we should see buying in the yen. We've got the rate announcement next week. Lagarde has come out and said, highly likely we're going to drop rates. Villeroy has come out this morning. There we go. This should be red news, really. Only a huge surprise would derail a June cut. So this is just all loads and loads and loads of confirmation that they are dropping that rate in June. It would take an astronomical thing to stop it happening. Yeah, disinflation is a very big danger for Eurozone at the moment. They're at 2.4. They want to be at 2. They're coming down in 0.2 increments. 2 months' time, they'll be at 2%. This is far too high to be running on target for inflation. You will disinflate and you will go into like a free fall, basically. So they need to get that down fast because that's getting too low. So, yeah, that is bearish euro. And we've got the Japanese interest rate change next week. So if they put that interest rate up, in theory, interest rate rises should be bullish, which means negative euro yen. So yeah, lovely looking short opportunity there. I really want to get out of this euro US. I just don't want to get stuck in this thing long term. I'm going to give it to the end of the day. I'm going to give it benefit of the doubt that this propulsion gap is going to hold it. If I can get out at break even, I'll probably take it. It hasn't gone anywhere in a week, and I just don't really want to be long euro. I don't really want to be long US dollar either. Anyway, but yeah, so US dollar yen, obviously, we've had the reversal alert. Market structure is broken south. So we need to see if this high holds. No reason why it shouldn't. We've got no other news this week that is going to affect us from the US dollar perspective. So we've had everything this week, excluding home sales, which won't do a lot. We've got retail sales for the pound tomorrow. So there's no more US dollar news this week, or yen, obviously. And the first news we've got next week is on Tuesday. So there's no news on Monday either. It's going to be a dead day on Monday. So this is the first sort of news that kicks in. It's PMI week next week. And obviously that is your first big US news, which is the PMIs at 245 on Tuesday. So you haven't got anything really that's going to affect the US dollar yen specifically. And obviously anything that affects that will affect the euro yen. But euro bearish, yen in theory bearish, bullish, which means obviously bearish euro yen. Lovely short now, look. There you go, there's your reversal alert, literally just gone in. So market structure shifted to the downside, sellers are in control. Pushing back down into these lows, but obviously there is potential for this to drop very, very hard from where we are. Shouldn't really be long anything euro now. Now that they are confirming and really coming out openly and saying we're cutting the rates in June, really everything euro you should be looking short only. I mean, it doesn't mean it's going to come down like that. I mean, it's going to come down probably like that, which means that you can do all these little longs. But overall, we don't know how fast and hard anything's going to drop, because obviously we've been through 18 months of interest rate rises, which were incredibly fast. Every month, 0.25%, 0.5% minimum every month. So there is an argument for saying we may come down that speed as well, in which case then if this starts, for example, the euro US starts dropping fast because the euro have dropped their rates and the US gets stuck with CPI and they say we're not coming until November or December, or they, worst case scenario, go we can't really do it this year because CPI keeps going up. This thing could just go like that. Yeah, you'll have no pushback at all from the US and it would just drop like a rock. If the US also then start to drop their interest rates, you're going to find much smoother price action, because when the US drop, it will push. When the euro drop, it will drop. When the US drop, it will push. You'll get more clean market structure, but we don't know at the moment. Waiting for JPY button is doing my head in. Doing my head in as well. Are they going to press it? I'm getting more and more. If you're short euro yen, that's fine, Sagar, but I'm getting more and more convinced that they're just not going to do it. But only because we've got no historical precedent for this, have we? We haven't got any historical precedent above this level to say what happens. And we've never had price above this level with negative interest rates. Every time we've been to these levels, they have had negative interest rates and overseas investment. That the situation now is different to what it was at the previous occasions. So it may be that they don't do it, but then if they don't do that, they have to increase their interest rates next week. They have to, because there's no other way of stopping this. The Japanese rate is next week. So yeah, we'll see what happens. I don't know. It's a we were laughing yesterday because the all this flooding that's going on in Dubai at the moment. My wife and I were sitting there watching the news, and the person on the television kept using the word unprecedented. Like, this is unprecedented. This is unprecedented. And then they started talking about the Middle East conflict, and then the bloke that talked about the Middle East conflict said, yes, this is unprecedented. It's an unprecedented situation. We've never been here before. And I just keep thinking, yeah, everything in the world at the moment is unprecedented. We've never been in any of these situations before. We've never had a 30% contraction in the stock market in the first quarter of a year, ever. We've never come out the back of a pandemic like this. We've never had interest rates go positive in the yen. We've never had the yen move above this level without intervention. We've never had all the FX markets stuck. We've never had them saying they're going to do something and not do something so much. Everything is new, isn't it? Normal market is not there anymore. This is not a normal situation. So you have to adapt to it. And all you can do is kind of watch and kind of cross your fingers and manage your risk. If the market isn't going to give it, it isn't going to give it. So you just have to sit there and take what you're given. One of the biggest problems I had when I was learning to trade was letting go of the fact that you haven't got control over anything in this market apart from your risk. That is it. You cannot forecast price. You cannot control price. You cannot see the future. You do not move this thing. It does. It pays you. When you get into a trade, you get paid as far as it goes. If it wants to go 1 ADR, that's what you get paid. If you don't take it and it drops 2 ADR, tough. If it goes 5 ADR and you take it at 1 ADR, you miss 4 ADR. That makes you cross. Yeah, this thing is designed to make you cross, make you nuts all the time, because you're basically trying to forecast the unforecastable. This is chaos. You can't say where anything's going. Everybody that says, yeah, it's definitely going down, I would say, well, it's definitely going up. And if they can't prove to me why it's going down, they're wrong. And if it goes down, I'm wrong. Nobody knows. Everybody has the same chances of going up or it's going down, isn't it? But when you get into situations where everything historically that has worked or been normal isn't there anymore, it's almost like you're drawing a line and going, okay, this is the history we've got to work on, not the last 20 years. Because it's unprecedented, isn't it? So, yeah, it's just we're in one of those weird situations in the world as a whole, but in especially in trading, where we're not in normal circumstances at the moment. RSI's not as reliable as it used to be because there is no relative strength at the moment. There is news and nothing. There is no move, profit take, move, profit take. There's nothing trending. Look at your higher time frames. Nothing this year or in the last 6 months, nothing is trending. The entire market is flat. Apart from the yen, which has been hammered. And now they're cross about it. Can't see anything but that, can you? I mean, but look at the last 3 months. Yeah. This year. Nothing's doing anything. You have to scroll out and look at the big picture. Yeah. For 3 months, we've done nothing. for the last year. We've done nothing. When did interest rates stop going up? What have we done since that? Got to be able to play these intradays somehow. Traded the chop, yeah, sideways. January, now, nothing, not gone anywhere. There is no movement. Exactly the same as pre-market, pre-Christmas. Just dead. Everything you look at, it's just painful. Yeah, look at every moving average, every single moving average. I feel so sorry for anybody that's a trend trader right now. They are just dead in the water. No trend trader has made any money this year. Nobody. Because there is no trend. You can't trend trade when there's no trend. There's nothing. We're just taking off now. So what's everybody going to do? As soon as it gets to here, buy the crap out of it. What they're going to do as soon as it gets to there, say they're going to change the interest rates. All the trend traders are going to get killed again. This is probably just going to do that until the Fed come out and say something. We're stuck. So you would say, in theory, mean reversion should work beautifully, and it is working absolutely beautifully. Yeah, every trade I'm getting into is banking very, very nicely, apart from the ones which are not having any. That, I mean, look at that there. I took that off there, not because it was a target, because it was an ADR. You're lucky if you can get an ADR out of something in a week. At the minute, it's just painful. So forecasting anything is just, you know, pick a direction. If the wind's blowing north, go long. If it's blowing south, go short. It's literally all you can do at the minute. Afternoon, Champagne. Afternoon, Brian. Morning, even. So yeah, not a lot really else to report today. Just quiet as you like. Pushing up again. So yeah, that's all I've got today, really. Tomorrow, we've got the pound retail figures coming out at 7 o'clock tomorrow morning. So that's your only news event of the day. It's not the end of the month. It's not the end of the quarter. It's not a triple witching. There's nothing exciting happening tomorrow at all. There is no news in the US session, and literally all we've got to drive the market tomorrow is retail sales. So we will be reliant on just something moving because the banks need to do a large transaction somewhere. So there's nothing really much to look at tomorrow, and Monday's dead as well. So I'm just hoping we start to get these moves which have ever so slightly started to kick off in pullbacks on what we've had. I'm just hoping that they continue this momentum that we've, you call it momentum. I mean, it's not really momentum, is it? But starting something. So I'm just hoping they just gradually continue these moves. But, you know, there's not much hope on any time frame of hourly or above of getting any signals on anything at the moment. So intraday trading M15. But I mean, if you look at this, I mean, M15, look at it on the US dollar Swiss. You couldn't have taken that because it was a V-shaped recovery. That was the only short opportunity you had, which you'd have been out on. You know, there's just nothing happening on any time frame at the moment. It's just pitiful. Depressing. But when you say we should adapt to the market and trading the overall trend is not possible, why is scaling not an option and get smaller profits instead of bigger? Yeah, exactly. That's what I'm doing, I'm getting smaller profits. The problem, the problem you will find if you scale up your size and go for smaller moves is when you scale up your size, the market will start to move. And then you will be double or triple your exposure at the time everything kicks off. And you'll just immediately be in hideous, hideous, hideous pain. You know, there's two schools of thoughts when this is basically what we call a regime change. So I've got the S&P. So a regime change is basically when the kind of the personality of the market changes. So a good example is when we went from a bull calm to a bear volatile in the S&P. Yeah. So this is a regime change in the entire Forex market of, we wouldn't even call it, it's just normal, basically, to abnormal. So if you look at this, there's COVID. Data, but this is a normal market in the S&P. Yeah, what we call a bull calm. So your ADRs are pretty normal. Everything's normal. Normal push, normal pull, normal push, normal pull. Bull calm. Everybody's happy. This is what we are used to in the market, and this is what has happened for decades. This bear volatile market expansion, the ADRs double, treble. The market gets huge moves, which you just come out of nowhere and you can't understand why they're doing things. Stocks are flying down when businesses are making money and doing the opposite, because that's what they did there. And then you go back into a bull volatile and then back into a bull calm. We're back in a bull calm now. Same as that on the stock market. But look at this absolute collapse we've just had out of nowhere. So the stock market, this is why I was saying earlier, I'm looking back at my old stock strategies, because this is getting back to normal. The FX market is anything but. And all that's happening in the FX market is a regime change. So bull calm to bear volatile. What we've had is kind of like a bull volatile, if you like. And now we're in range calm, if you like. It's we don't have a name for it because it doesn't do it. The entire market just not doing anything, and ADR's contracting by 30%. It just doesn't happen to everything at the same time. It happens to individual currencies. So you'll have a rally on the US because they're going through an interest rate rise for a year, and then you'll have a calm US, then you'll have a rally. Yeah, but everything has gone like that. So when you adapt to this by going, oh, right, look at the last 3 months, everything's range bound. I'm going to become a range trader and I'm going to double my lot size because I'm only getting half as much movement as I used to. So the first trade you take when you double your lot size is the one where the bull calm or the bull volatile market starts again. And every single trade you took, 4 of them, 5 of them, however many there was at that point, all going to hot water with 2x the risk, twice as fast as what you were expecting. Before you know it, 50% of your accounts vanished. You have to sit through these times. And it's the same as I've discussed this before, changing your indicator. So when you look at indicators and you go, I'm just not getting the signals I used to. If I had used a 14, not even a 14, if I'd have used a 7, I would have got a load of more signals. Look, I've got a long there, I've got a short there. That's what I'm going to use. So you move over to a 7. And as soon as you move over to the 7, things start going mental. And all of a sudden, you're in a squeeze at the start of it rather than halfway through it. Yeah, you can't change very easily to different market conditions because you will get stung. And this is the thing that frustrates traders a lot. Especially when you're learning and when you're new, you don't understand what the market does and why it does things. You'll get a trend strategy and you'll be trading the US dollar yen. You'll be trading the US dollar CAD. You'll be trading the US dollar Swiss using this trend breakout strategy. And you're making a fortune. It's low. Everything's working brilliant. And then all of a sudden you go through a losing run and your P&L goes like this. And then your P&L does that. And you're like, oh, this looked really good. It's a load of crap. I've wasted 3 months on it. I'm going to go to the next strategy. There's nothing wrong with that strategy. It's a trend strategy. The market's gone range bound. You don't realize the market's gone range bound. You just think the strategy doesn't work anymore. So you go and look at the last 3 months where you've been losing money and you go, if I'd have just done that and that, I'd have made a fortune. So you turn into a range-bound trader and you start doing range-bound trades. And all of a sudden, the market goes into a trend again. And for that small amount of time, you start making money, your P&L looks good, and then it collapses again. And you're like, oh, crap. And then you go, but that old strategy I used to trade seems to be doing well now. I'm going to go back to that one. The endless cycle of system hopping. Nothing wrong with any of the systems. It's the fact that you can't withstand a loss. And it's the same as at the moment. There's nothing wrong with the strategies that I trade at all. They're just finding it very hard to make money in something that just doesn't go anywhere. I don't care if you're a trend trader, a range-bound trader, or what type of trader you are. You need market volatility and movement. We ain't got it. So just got to sit through these things. And there's a lot of unprecedented things happening, obviously, as we know. So, but you can change, but you have to be very aware. If you increase risk and you go down to lower time frames, it will work for a period and then it will stop working. By the time you've noticed it stopped working, you'll have given back all the profits you'd made over the last X. And that's just not what you want to be doing, is it? I'd rather sit here and make virtually no money for a month than change what I do, because what I do has been working for 5 years. And what I don't want to do is go system hopping. But what I will do, and I am going to do, is look at some of the old strategies that I used to trade, which were marginally successful, and revisit them, because having diversification on your strategies is a good thing. Because if you run a range-bound strategy, a breakout strategy, and a trend strategy, think about the only three things the market can do. It can be breaking out into a trend, or it can be a false breakout and stay in a range, or it can be stuck in a range. Those are the only three things the market can do. It accumulates. It tries to break out. That will either fail or succeed. So if you have a range-bound strategy, a breakout strategy, and a trend strategy, you're always going to be winning money one way or another. So I think you just need to look, I need to look more at diversification at the minute, because everything's stuck. And I've got a feeling this is not going to become the new norm, but I don't think this sort of market regime is going anywhere very soon. When those interest rate drops start, we are going to get a lot of market movement, but we are going to find a very bumpy ride, and a lot of stuff I think is going to get stuck again. The ECB is going to come down really, really fast. Then it's going to have to stop. And then we'll all be asking what you're going to do. We're going to be back in these sorts of situations again. So how did the ADR bands do? All right. All right until the last 6 months. So the ADR, so for those who don't know, I was running an ADR, I was running a strategy experiment using the 72 MA. 72 EMA on the daily, which is your monthly moving average, or quarterly moving average. So what I was doing was, you can see when you get certain distance away from the moving average, market rebounds. Yeah, when you get a certain distance away, it rebounds. Yeah, it's what it's just what it does, isn't it? So I was measuring distance and looking for an edge, a bit like Bollinger Bands, and it worked really well until we got here. And the whole purpose of me developing this was to see if there was a replacement I could use for the RSI. And the difference between using this strategy of ADR distance from MA and RSI extension, there wasn't a lot in it. It took very similar trades at different times, admittedly, but you still got into the same type of squeezes, and you still got excellent entries roughly around the same times as you did on this. So there wasn't an edge that was worth replacing my entire strategy for that you could use. And it was only effective on H4 and daily. And H4 is, at the moment, is just too slow to make money. You can't do it. Still useful as an indicator, no more useful than the RSI. Just to plan out how far a squeeze could go, sometimes it went 10 ADR. It's not any more use. I didn't find any use personally in it. If you look at this, look at US dollar Swiss as an example. So let's say you were using 5 ADR from the moving average, and in this case it went 10. Doesn't help you. It helped you there, and it might have helped you there. It didn't help you there. Same way as the RSI didn't help you there, and you can't see it, but the RSI didn't help you there. So there wasn't an edge. No different to what we have with the relative strength. Because all we're doing with the ADR is we're measuring distance. And the downside to the RSI is you can flatline after a trend. So there's a good example, exact example here, look, right? So we push from midline to high, short it. If you didn't get out of the short, what you got was a range and a reset back to where you were, having done no movement whatsoever. And then you started a squeeze. So you got in short, you couldn't get out, and you got squeezed. So the RSI didn't help you there. ADR extension wouldn't have helped you there either. It would have done very much the same thing. Because the RSI you can measure from different levels. So when you get an RSI start from the bottom and get to the top, it still has no more benefit from the RSI starting from there and getting to the top, because you'll have a pullback in the middle. You know, there was just no edge in it. There was no edge from a mean reversion perspective. But one of the old strategies I used to trade is called a baseline breakout, and it was a strategy on the daily charts, and it basically uses multiple MA contraction to identify bases, basically. So when a stock is about to explode, you tend to get a base form, and then the stock will make a propulsion gap move, yeah, which is your breakout. So one of the other strategies I'm looking at is utilizing that strategy on FX, but using ADR. So where we at the moment have ADR mean reversion, it would become ADR breakout. So what we're looking for is a base where you do not get an ADR move for X number of days. I don't know, I'd have to test that. And then you get a propulsion move, which is an ADR hit, and it closes above ADR. So basically what you're thinking of is a strong close candle, which is a strong bull move where the bears have no answer. This candle here. Yeah. So that's an ADR breakout. Not in this case, because there's no base. There is no base on here because it's a massive range. But if it was a base and then you got that ADR move, that's your buy. So it's just a breakout, retest, buy, add. Very, very simple strategy. It used to work fantastically in stocks, and you would go 3 legs with it. So you'd have a baseline, break, add, out. And we used to use a moving average crossover for exit. But so I'm looking at adapting that into this at the moment, because we are on the cusp of all these interest rate changes. We're going to get some big trends starting. So what I would like to do is get on some of these big trends and kind of replace my old S&P account that I used to trade here. So I mean, in this here, I was trading the S&P with the market reversal alerts EA. So this was basically literally every one of these pullbacks, the MRA was scaling me into longs, scaling me into longs, scaling me into longs. And this was my pension fund account. And then that happened. And that's where I don't know if you were here, but if you were here with me, you know that that is where I turned that off. And I said, if this is a market structure break and we're going into a bear market, you do not want to be buying it anymore. And that's where we went bear volatile, and proper bear volatile, way more than I'd expected. So at the moment, what I think we're going to do, and what I think we're doing at the moment, is we're forming bases, and we're going to get some interest rate changes. So when Lagarde says we're dropping 0.25%, you're going to get that propulsion break. Yeah, you want to do nothing but short that thing. So you could put the position trader EA or the market reverse alerts EA onto short only mode. Every ADR extension, every RSI extension, you just sell it and you keep selling it, but you hold it. So I'm looking for a trend. I'm just going back through, this morning, I've been going back through all my old documentation on the baseline breakout strategies and just refreshing my mind with the moving averages we used to use on them. All the different MA combinations that we used to use, and just revisiting it basically, just to add some diversification. It's a tough market at the minute. You know, there's things like this where you're just not used to getting into a trade and sitting there. You know, this is 1, 2, 3, 4, 5, 6 days. It's not gone anywhere. 6 days. We had a major fundamental shift in news. Normally that would go bang, flag, break. You'd be off. No. Because the market just hasn't got any balls at the minute. Hasn't got any real conviction in any direction on any instrument. Apart from the stock market, which is, happy as Larry at the minute. Well, say it's happy as Larry at the moment. Bit of a correction going. This could turn into another bear volatile run all the way back down. You know, we don't know, do we? Because this is just not that unprecedented word again, isn't it? Odd. Afternoon, Gina, Ismet. Edward, my first entry is 0. If my first entry is 0.1 lot and my second entry is at 1.2 ADR distance, how do I calculate my next lot entry? Up to you. It's got nothing to do with your next lot entry is your choice. You either go in with the same lot or you go in with a slightly larger lot. The distance has got nothing to do with it. That's not, you're looking at it the wrong way. If you get in somewhere, I mean, the ideal is you want to keep this within ADR. It's not going to be possible all the time. Yeah, this move here, is 63, 120. That's 2 ADR. Yeah, you had no bearish signal on that move from there to there. Yeah, you had no choice but to get in. Let's say you got in there and there, 2 ADR apart. Yeah, that doesn't affect the lot size you use there. If you wanted to keep your average bang in the middle, then yes, you could adjust the lot size. But why do you want to keep your average bang in the middle? You want to scale into the position. Don't get in with something massive just because it's moved a bit further. Moved a bit further for a reason. Bullish. Yeah. So you don't want to scale in too fast, too hard. Otherwise, you'll get yourself into trouble. If you're using a lot multiplier, like a 1.2, for example, and you get in with one lot, your next one is 1.2. Yeah. And your average is where your average is. You can't change that. But, averages are, ideally you want to be within an ADR. The only reason I say you want to be within an ADR is because we know that price spends 58% of its time within average daily range. So we do get 42% of the time, the market going beyond its average daily range. So if you can keep your average within the average daily range, you know that 42% of the time, roughly 2 times a week, you're going to get a chance possibly to get out of the trade. That's literally it. You're using ADR as a measurement of I'd like to keep within that because we know the market moves within that range. But if the market's been like Aussie dollar, New Zealand dollar, if the market's been like this since February, or the beginning of March, basically, it's 27th of Feb, the market's been like that, yeah, my average on this before I got out of these positions was over 225 ADR away. But this thing has, look at this, it's a 50% retracement to get back to there. This thing could do an A-shaped recovery and come all the way back down there. So I'm not really worried about my average being within an ADR because the amount of movement it's made. I have no clue where it's going. It could hit that and bounce. This propulsion gap, they bought. They could buy it again. It could bounce off of that. It could bounce off of that. It could come all the way down and retest these highs, which is the previous level of support, which we pushed through and then used as resistance. Then we broke through it and used it as support again. Massively strong area, that. That could be the test, which is a 71 retracement. I don't know where it's going. Haven't got a clue. But for me, I'm short, and that's where my average price is. That's where I need it to be. But I'm not adjusting anything because of any reason. This is a bad example because this is a cock-up. Because I switched from the market reverse alerts EA that took these trades over to the position trader EA that took these trades. And the position trader EA was told to get out with 1% profit. So it did. I didn't want to get out. I wanted to hold these positions so that I had an exit. And I would not been out in profit, but I think my average was, actually it wasn't far off where it is now because I added the positions back on again. So that's kind of a simulation of where my average would have been anyway. But I think Williams has stopped talking now. I don't feel urgency to cut rates. Fed. Yeah, not interested in rate cuts. Bullish US. Not bullish US yen though. Right, so that's all I've got for you today. Anything else you need, let me know. I'll be in Telegram or Discord. I'll be back tomorrow morning at 8 o'clock, and we will be analysing, because it will have already happened, the retail sales, seeing what that's done. There's nothing else to look forward to tomorrow. So I get the feeling tomorrow might be quite a short stream as well, because there's not an awful lot going on anywhere, is there? We're quiet. So we'll have a look at whatever we need to have a look at. Yeah, we'll see where we go. But hopefully this market reversal is going to hold on the Euro US. Nice triple bottom break there. So we've broken that high now. So I'm hoping this propulsion gap holds today. That's only an ADR, look. It's all I want. We'll see. All right, have a good day. I'll be back tomorrow morning at 8 o'clock. If not, I'll be back on Monday, probably 8 o'clock as well, because there's no news. So the next afternoon session will probably be on Tuesday next week. So if you can't make the mornings, I'll see you next Tuesday. Otherwise, I will see you hopefully tomorrow. Have a good day.